Competition Amendment Act 2023 is set to notify several provisions of the Competition Amendment 2023, which amended the Competition Act of 2002. Competition Act 2002 it replaced the Monopolies and the Restricted Trade Practice Act of 1969. It provides for the establishment of the Competition Commission of India Act for which anti-competitive agreement, corporate abuse or dominant position, set combination including the acquisition, takeover of control and mergers and acquisitions that have or likely to have materially negative impact on competition in India. The anti-competitive agreement, corporate abuse of dominant position and combination including acquisition, takeover of control and mergers. Definition of combination. The center in the Competition Amendment Act expand the definition of combination, merger, acquisition or amalgamation of enterprise to include transaction with a value above rupees 2000 crore. Reduction in the time limit for approval of combination from those who thus days. So then the Competition Commission of India is not required to form a prima facie opinion on a combination within 30 days, otherwise the combination shall be deemed to have been approved. Definition of control for classification of combination. CAA modifies the definition of control as the ability to exercise material influence over the management affairs of the strategic commercial decision. Expansion of scope of cartel to include hub and spoke arrangement. Companies which are not engaged in identical or the similar business activity can also be held liable for the anti-competitive horizontal agreement. The Competition Amendment Act expands the definition of the combination, merger, acquisition or the amalgamation of enterprise to include the transaction with a value above rupees 2000 crore. Reducing the time limit for approval of combination from those who thus day. So then the CCI is now required to form a prima facie opinion on the combination within 30 days. Otherwise, the combination shall be deemed to have been approved. Definition of control for classification of combination. The Competition CAA modifies the definition of control as the ability to exercise material influence over management affairs or the strategic commercial decision. Expansion of the scope of cartel to include hub and spoke arrangement. Companies which are not engaged in identical or the similar business activity can also be held liable for an anti-competitive or horizontal agreement. Expansion. Hub and spoke arrangement. Companies which are not engaged in identification or similar business activity, they can also be made liable for an anti-competitive horizontal agreement cartelization where they participate or intend to participate, facilitating such an argument. Grievance redressal penalty provision. Limited and limitation period for filing information. A complaint against the anti-competitive conduct needs to be filed before the Competition Commission of India within 3 years from the date on which the cause of action arose. The Competition Commission of India is empowered to condone delay. Complaint against the anti-competitive conduct needs to be filed before the competition within 3 years from the date on which the cause of action arose. The CCI is empowered to condone delays. Increase penalty for false statement, omission of material information from 1 crore to rupees 5 crore. Penalty based on global turnover. The penalties for the anti-competitive agreement and abuse of the dominant position would be imposed based on the global turnover derived from all the products and services by such a person or an enterprise. Competition Commission of India is headquartered in New Delhi. It is a statutory body created by the Competition Act of 2002. It has a duty of the Commission to eliminate practice having adverse effect on competition, promote and sustain and competition, protect the interest of the consumers, ensure freedom of trade in the markets of India. Ministry of Corporate Affairs chairperson and at least two to maximum 6 other members to be appointed by the central government. Term of office of chairperson and members is 5 years. Chairperson at least 2 members, and at least 2 to maximum 6 other members to be appointed by the central government. Term of office of chairperson and member is 5 years or the age of 65 years, whichever is earlier. They are eligible for reappointment. The Commission can acquire into certain agreement, combination and dominant position of the enterprise. It can regulate its own procedure and amend its order to rectify any mistake. Failure to follow the Commission orders or direction can result in fine or imprisonment. Compounding of offences. The Competition Commission of India. The Competition Amendment Act introduces a provision which allows the compounding of an offence which does not entail imprisonment. Compounding an offence indicates that the individual with whom the crime has been perpetrated has acquired some compensation from the accused, not exclusively of monetary nature, to avoid the litigation process. Leniency regime. Where a party complicated in a cartel investigation makes a true and avoided discourse of an alleged violation or another undisclosed cartel, Competition Commission of India is empowered to also grant an additional lesser penalty for the cartel already being investigated. Decriminalization of certain offences. CAA changes the nature of the punishment for certain offences from the imposition of fines to penalties. These offences include failure to comply with orders of the CCI and direction of the Director General with regard to the anti-competitive agreement and abuse of dominant position. The judgment and commitment mechanism of the CAA. Competition Commission of India may initiate proceeding against the enterprises on grounds of entering into an anti-competitive agreement. CAA permits the CCI to close inquiry proceeding if the enterprise of a settlement may involve payment or commitment, may be structural or behavior. Well, implementation of the open offer purchase of shares. CAA permits the implementation of an open offer for acquisition of share or security through transaction on a regulated stock exchange before CCI's approval. The approval would be allowed to acquire shares but cannot exercise any ownership or beneficial right or voting right or receive dividend or any other distribution till the CCI approves such acquisition. Ambiguity in interpretation of concept like material influence, transaction value, increased burden on parties to undertake a detailed engagement with CCI. Flood of additional transaction having to be notified to the Competition of Commission of India due to low threshold. Considerable time pressures on the parties as well as the CCI. As per the CA, the DG shall now be appointed by the CCI with power of prior approval of the central government as against the erstwhile power being vested with the central government. Significance of the amendment: speedy approval. The reduction in the maximum time limit for the approval of the combination would provide more speedy approval. Fair competition by requiring CCI's control for transactions that exceed rupees 2,000 crore threshold. The Act's speedy approval, more reduction in the maximum time limit for the approval of combination would provide more speedy approval. Fair competition by requiring CCI's approval for transactions that exceed rupees 200 crore threshold. The Act seeks to ensure that the large-scale merger and acquisition transactions do not result in anti-competitive practice and promote fair competition in the market. High penalties. The computation of penalties based on the global turnover result in high penalties for the global multi-product companies, thus increasing deterrence. Increase in the number of the transactions to be caught under the merger control jurisdiction of the CCI through the introduction of the deal value threshold and the dilution of the threshold for control. Facilitating faster resolution of enforcement proceedings through settlement and commitment. The amendments are forward-looking, capable of handling competition law or issues of the future. The next phase of the reform aims towards clearing any possible ambiguity and creating processes to ensure easy and effective compliance with the provision. Transition from London Interbank Offered Rate. London Interbank Offered Rate. The Reserve Bank of India has issued an advisory to banks and other RBI regulated entities asking them to take steps to ensure a complete transition away from the London Interbank Offered Rate from July. The LIBOR, London Interbank Offered Rate and the Mumbai Interbank Forward Outright Rate. London Interbank Offered Rate, Mumbai Interbank Forward Outright Rate will be phased out by 30 June. MIBOR, a domestic interest rate benchmark, is presently published by the Financial Benchmark India Private Limited. Bank financial institutions have been advised to ensure that no new transaction undertaken by them or their customer rely on or are priced using the US dollar, LIBOR or MIBOR. LIBOR is London Interbank Offered Rate at a Mumbai Interbank Forward Outright Rate, and the Interbank Offered Rate, Mumbai Interbank Forward Outright Rate. The global transition from LIBOR was necessitated after the British financial authorities decided to phase it out in 2017. Interbank offer. The global transition for the LIBOR was necessitated after the British financial authority decided to phase it out in 2017 after discovering that some large banks manipulate the reference rate up or down to provide the false data. LIBOR on MIBOR. LIBOR benchmark. LIBOR is a global benchmark interest rate at which the major global banks lend to one another in the international interbank market for short-term loans. Prior to 2012, LIBOR was administered by the British Bank Association. Later, the maintenance of the benchmark was under the purview of the UK Financial Conduct Authority. Before 31 December 2021, LIBOR was calculated for 5 currencies: US dollar, euro, pound, Swiss franc and Japanese yen for 7 tenors. After announced its phase rollback in March 2021, only US dollar LIBOR were allowed to be published. It uses as a benchmark. It is used as a benchmark to settle trades in future options, swaps, and other derivative financial instruments in over-the-counter or market and on exchange globally. It is used for commercial products like floating rate certificate of deposit, variable rate mortgage, etc. Consumer lending products, including mortgage, credit card, and student loan, among others, to use it as a benchmark rate. Need for the global transition from LIBOR, the reliance on banks. The central flaw in the mechanism was that it relied heavily on the banks to be honest with their reporting disregarding their commercial interest. Manipulation. In 2012, the extensive investigation into the way LIBOR was set uncovered a widespread, long-lasting scheme among multiple banks to manipulate the LIBOR rate for profit. Role in 2008 financial crisis. The use and abuse of the credit default swap was one of the major drivers on the 2008 financial crisis. Rates for the CDS credit default swap were set using LIBOR. Financial Benchmark India Private Limited. Headquarter Mumbai. Financial Benchmark India Private Limited. Financial Benchmark India Private Limited, headquarters Mumbai. The Financial Benchmark India Private Limited, jointly owned by the Fixed Income Money Market Derivative Association of India, Fixed Income Money Market and Fixed Income Money Market Derivative Association of India, Foreign Exchange Dealers Association of India, Foreign Exchange Dealer Association of India, Indian Bank Association, was formed in 2014 as a private limited company under the Companies Act of 2013. It aims to develop an investor benchmark relating to money market, government security, and foreign exchange in India. Develop an investor benchmark relating to money market, government security, and foreign exchange in India. FBL is regulated by the Reserve Bank of India, responsible for all aspects into the benchmark to be issued by it, namely collection and submission of the market data information, including the poll data formation, adoption, periodic review of benchmark, calculation methodology, calculation, publication, and administration of benchmark. The use and abuse of the credit default swap was another major driver of the 2008 financial crisis. Rate for CDS was set using LIBOR. Additional transition benefit to India: reduction in financing cost. Potential to reduce the cost of the financing in several ways, as the calculation of the reference rate going forward will be more robust and transparent. Reduce borrowing cost. Resultantly, lenders and the investors may require lower interest rate or spread. Lenders or investors interest rate or spreads, leading to reduced borrowing costs. Moreover, the customers and the client will be benefit from the elimination of the LIBOR premium, which is typically included in the lending rate, to compensate for the potential volatility and uncertainty associated with the LIBOR. More competition. The introduction of the alternate reference rate may introduce more competition in the market for reference rate. This can lead to more transparent and competitive pricing of financial products. Financial benchmark indices, values, and reference rate used for the purpose of pricing, settlement, and valuation of the financial contract. Over-the-counter market, a decentralized market in which the market participant trade stocks, commodities, currencies, or other instruments directly between the two parties and without a central exchange or broker. India's transition and exposure to LIBOR are from loan contracts linked to it. Foreign currency non-resident account we deposit with floating rate of interest and derivative. Alternate reference rate. RBI established a system of alternative reference rate that allows the bank to choose rate from a basket of currencies rather than the British pound for international financial transactions. RBI has added MMI to the list of the significant benchmark administered by FBL. MII would be based on the adjusted SOFR fallback clause. RBI has pushed for the insertion of the fallback clause in all remaining legacy financial contract that reference LIBOR or MIFOR. The fallback clause refers to an agreement for revised consideration when the reference rate is no more published, important for transparency and the consistency. Alternative to LIBOR: US secured overnight financing rate. European and US में secured overnight financing rate. यूरोप का European interbank offered. Japan Tokyo interbank offer rate. China Shanghai interbank offer rate. India's modified Mumbai interbank forward outright rate. इंडिया का मॉडिफाइड मुंबई इंटरबैंक फॉरवर्ड आउटरेट रेट. चाइना का संघाई इंटरबैंक ऑफर रेट टाइपर का टोक्यो इंटरबैंक ऑफर रेट इंटरबैंक यूरोपियन का यूरोबर एंड एसोफर. आइडेंटिफाइंग अल्टरनेटिव फॉर लेबर. challenges in transaction. Okay, identifying and adopting the suitable alternative ARR to replace LIBOR. Different jurisdictions in the market have chosen different rates, such as the SOFR for the user type or in Japan. Addressing all, as the basket of currency becomes wider, bank and the financial institution need to assess the suitability of AR for their specific product and contract to avoid contractual fallback. Updating these provisions can be very complex as they involve legal, operational, and the documentation Updating these provisions can be either legal, operation, and documentation changes. His investment in transition from the LIBOR requires making significant adjustment to international system, process, and model. Bank FI in India need to invest in the necessary technology upgrades and ensure smooth integration without disrupting day-to-day operation. Liquidity challenge. The introduction of the AR also poses challenges to the market liquidity and consequently can lead to the market inefficiency and impact pricing. The transition from LIBOR to AR involves several steps, and the financial institutions such as non-banking institutions still face challenges to assess the impact of the LIBOR transition product. Going forward, standardized research-based guidelines should be created to supplement the capacity of these institutions and enable them to choose AR, which creates smooth transition for these institutions and the economy alike. Leveraged remittance scheme. Under the RBI's leveraged remittance scheme, the Finance Ministry has included the overseas use of credit card by an Indian resident. Credit card by Indian resident within the $2.5 lakh limit. Applicability of the tax collected at source. TCS. Tax collected at source is a type of tax collected by the seller of selected goods and services from the buyer, or in the context of foreign remittance transaction, this tax is collected when individuals send money abroad. Union Budget 2023-24 proposed maintaining 5% TCS for foreign remittances as exceeding ₹7 lakh towards education and the medical. 5% TCS for foreign remittances exceeding ₹7 lakh towards education and the medical treatment. Similarly, it proposed no change in the 0.5% TCS on the foreign remittances exceeding ₹7 lakh towards education through loans from the financial institution. And however, for foreign remittances for other purpose and LRS and purchase of an overseas tour or program, it proposed hiking the TCS from 5 to 20% and that to removing the threshold of rupees 7 lakh. Until now, a provision of the Foreign Exchange Management Act FEMA Foreign Exchange Management Current Account Transaction Rule 2000 excluded resident Indian overseas use of credit card during foreign travel from the 2.5 lakh cap. Debit card transactions abroad are already accounted for in LRS. Demographic weather regulation will impact the spending by high net worth individual during the foreign visit by reporting the details of such overseas spending to the authorities. FEMCAT, they have been brought out under the Foreign Exchange Management Act 1999. Under Foreign Exchange Management, all resident Indians are free to buy or sell foreign exchange for any current account transaction except for those transactions for which withdrawal of foreign exchange has been prohibited by the central government. Background of LRS. The LRS scheme was introduced in 2004. The primary objective of the LRS is to liberalize the existing foreign exchange regulation and facilitate the smooth transfer of funds abroad. They have been brought out under the Foreign Exchange Management Act 1999. Under the FEMA, all resident Indians are free to buy or sell foreign exchange for any current account transaction, except for those transactions for which withdrawal of foreign exchange has been prohibited by the central government. Background of LRS. The LRS scheme was introduced in 2004. The primary objective of the LRS is to liberalize the existing LRS Foreign Exchange Management Act 1990. They have been brought out another foreign exchange Vietnam. Under the foreign, all resident Indians, they are free to buy or sell foreign exchange of any current account transaction except for those transactions for which withdrawal all of foreign exchange has been prohibited by the central government. Background for LRS scheme was introduced in 2004. The primary objective of the LRS is to liberalize the existing foreign exchange regulation and facilitate the smooth transfer of the funds abroad by Indian residents. Under LRS, all resident individuals are allowed to freely remit up to rupees 2.5 lakh per financial year for any permissible capital or the capital account transaction or a combination of both. Individuals require the RBI's prior permission to make any remittance above this threshold. Prohibited remittances for purpose is specifically prohibited under the Schedule 1 or restricted under the Schedule 2 of the Financial Exchange Management Act CAT rule for trading in forex abroad. Capital account remittances to countries identified by the FATF as a non-cooperative countries to those individuals and entities identified as posing risk of committing acts of terrorism. For gifting to another resident in foreign currency. Permissible remittances, private visit to any country except Nepal, Bhutan. Prohibited remittances for purpose specified, especially prohibited in the Schedule 1 and Schedule 2 of the Foreign Exchange Management Current Account Trade Rule. For trading in forex abroad. Capital account remittances to countries identified by FATF as non-cooperative countries, to those individuals and entities identified as posing risk of committing acts of terrorism. For gifting to another resident in foreign currency. Private visit for any country except Nepal and Bhutan. Gift or donation. Going abroad for employment. Take a permissible remittances. Private visit for any country except Nepal and Bhutan. Gift or donation, going abroad for employment, immigration, maintenance of close relative abroad, travel for business or conference or specialized training or for medical expenses, studies abroad. Under LRS, all resident individuals are allowed to freely remit up to rupees 2.5 lakh per financial year for any personal current or the capital account transaction or a combination of both. Individuals require the RBI's private or permission to make any remittance above this threshold. The scheme is not available to corporate partnership firms, SGO, trusts, etc. The remittance can be made in any freely convertible foreign currency insurance sector. Insurance chief said that they are working to introduce a plan worked out with general and the life insurance firm that he termed as Bima Trinity. Draft guidelines for the Bima Vahak. IRDAI has issued draft guidelines for Bima Vahak. Primary objective of the Bima Vahak guidelines are to establish a dedicated distribution channel focused on enhancing the insurance inclusion and creating awareness in every Gram Panchayat. This aims to improve accessibility and availability of the insurance in every nook and corner of the country. Guidelines define two types of the Bima Vahak. Corporate Bima Vahak, like a legal entity registered under the Indian laws and engaged by the insurer. Individual Bima Vahak, and appointed by an insurer or appointed by a corporate Bima Vahak. Corporate Bima Vahak, individual Bima Vahak. The scope of activities assigned to Bima Vahak include the collecting proposal, information, KYC, compliance, coordination and supporting policy, claim status servicing and facilitating premium payment process, which include three components. Bima Sugam, a platform to integrate the insurer and distributors onto one platform. Platform to integrate insurance and distributors onto one platform. Platform to integrate insurance and distributor onto one platform, act as a one-stop shop for customers who at a later stage can pursue several requests and settlement of claim through the same portal. A bundled risk cover for health, for life, health, property and casualties or accident will have defined benefit for each risk that can be paid out faster than usual without the need for the surveyor. Bima Vahak carrier, women-centric workforce in each Gram Sabha that will meet the women's head of each household to convince them about the benefits of the composite insurance product. So other measures proposed: state level committee and the value added service. ATI is considered the formation of a state level insurance committee collaborating with the state government. These committees will devise the district level plan to offer the localized insurance solution that cater to the diverse need of the population. New value service. ATI is proposing amendment to insurance laws that would enable the insurers to offer value added service such as the gym or yoga membership and nursing of state level committee and value survey. ATI is considering the formation of the state level insurance committee collaborating with state government. These committees will devise a strict level plan to offer a localized insurance solution that cater to the diverse need of the population. Okay, Bima Sugam platform to integrate insurers and distributors. जो इंश्योरर्स है and divided one platform act as a one-stop shop for customer who at a later stage can pursue service request and settlement will came through the same portal. Bima Vistar, a bundle risk cover for the life, health, property and casualties or accident will have defined benefit for each thing that can be paid out faster than usual without need for the surveyor. Women centering Bima Bhag in each Gamsa that will meet the women's head of each household to convince them about the benefits of composite insurance product. State level committees and the value added service. ATI is considering the formation of the state level insurance committee collaborating with state government. These commitments will devise strict level plans to offer the localized insurance solution that cater to the diverse needs of the population. New value added service. ATI is proposing amendment to insurance laws that would enable the insurer to offer value added service such as the gym or yoga membership and the gym, yoga and the nursing service. ATI is proposing amendment to insurance laws that will enable insurers to offer value-added services, gym or yoga membership and nursing services. Current status of insurance sector in India, total premium in terms of the total premium volume, it is 10th largest market globally. Within current status of insurance sector, 10th largest market globally with an estimated market share of 1.9. And India is poised to emerge as one of the fastest growing insurance market in the coming decade. Insurance industry in India, it has increased from $11.1 in 2008 to $91 in 2021. Life insurance 69, non-life if insurance $22. Insurance penetration in India, it has been steadily increased from 2.7% in 2000 to 4.2% in 2021. Insurance penetration in the life insurance sector was 3.2% in 2021, twice more than the emerging market and slightly above the global average. And intended benefits of the Bima Trinity: affordable bundle product that provides comprehensive health, life, property and the affordable है and bundled product, comprehensive health, life, property and accident coverage, boost in insurance coverage, bridging the existing protection gap, introducing differentiation in the industry and catering to various geographic and pollution segments, streamlining claim settlement by the process. Claim settlement. Insurance in India, it has increased from 11.1 to 91. Insurance penetration in India, it has been steadily increased from 2.7% to 4.2 in 2021. Insurance penetration in the life insurance sector was 3.2% in 2021, twice more than the emerging market and slightly above the global average. Growth driver of insurance sector in India, the 10th largest insurance sector in the world, and is poised to be the 6th largest insurance market in the world by 2032. The key growth drivers are favorable demographics. 55% of India's population is in the age group of 20 से 59 working population in the year 2020 and is estimated to reach 56% of the total population by 2025. is in the age group. इंडिया में 20 से 59, 20 to 59, 60 साल के नहीं हुए. 20 से 59 कितने 55% एंड एस्टिमेटेड रीच कितना हो जाएगा 56% बाय 2025. दिस पॉइंट टुवर्ड्स यंग इंश्योरेबल पॉपुलेशन इन इंडिया. 10th largest बनना चाहते हैं कि फेवरेबल डेमोग्राफी वाई इट मिडिल क्लास एक्सपेंसिव बाय द इंडिया विल हैव by 2030 तक 140 middle class income and 21 million and high income household which will drive the demand as well as the growth of the Indian insurance. Digital behavior pattern agents ease along with citizen ease and digital tools has grown with more than 50% and amenable to virtual renewal. Pandemic related shift in demand patterns. COVID has spiked the digital adoption and pandemic increased the insurance penetration rate and triggered awareness on insurance. Insurance penetration ratio of the total insurance premium to gross domestic product in a given year. Insurance density is the ratio of the total insurance premium to whole population of a given country in a given year. Insurance penetration, insurance density. Insurance Regulatory and Development Authority of India is headquartered Hyderabad, Telangana. Ministry of Finance, Department of Financial Service. Genesis, it is formed as a statutory body under an Act of Parliament, Act of 1999, to grant licensee to reinsurance companies and insurance intermediaries to protect interest of the policyholders, to regulate investment of the fund by insurance companies, professional organizations connected with the insurance business. Okay, to undertake an inspection of conduct inquiries and investigation of the entities connected with the insurance business. Entities regulated by ADI. Life insurance companies, both public and the private sector companies. General insurance companies, both public and the private sector companies. Reinsurance companies, agency, channel intermediaries, life, corporate, etc. Now challenges facing the insurance sector कौन सा है? एडाई मिनिस्ट्री ऑफ फाइनेंस के अंदर आता है, स्टैट्यूटरी बॉडी है। एडाई एक्ट ऑफ 1919 ग्रांट लाइसेंस प्रोटेक्ट इंटरेस्ट ऑफ द डिपॉजिटर टू रेगुलेट इन्वेस्टमेंट ऑफ द फंड। Ambiguity in insurance lending leading to an ambiguity in insurance contract leading to his pendency in the consumer case in the sector of inflexible policy terms needs capital infusion of rupees 50,000 crore per year to double the penetration in the next 5 years. Lack of consumer awareness. Rural participation of insurance remain deficient. Significant gap in insurance and low insurance penetration and the density. Government initiative under Ayushman Bharat Pradhan Jan Arogya Yojana to 28+ million beneficiaries have been provided Ayushman card. Other initiatives include the Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Bima Yojana, Pradhan Mantri Fasal Bima Yojana. Investment opportunity with entry of the private players between 2013 से 2014, 2021 से 22 the share of the state-owned companies has dropped in both life and the non-life segment. Government also raised the level of the foreign direct investment in domestic insurance to 74% from 49%. Investment policy with the entry of the private player, the share of state owner has dropped. Government has also raised the level of FDI insurance to 74% from 49%. Government initiative Ayushman Bharat Pradhan Jan Arogya Yojana, 230+ million have been provided Ayushman card. The initiative includes the Pradhan Mantri Suraksha Bima Yojana, Pradhan Mantri Jeevan Jyoti Yojana, Pradhan Mantri Fasal Bima Yojana. It aims to create a transformative UPI-like movement and in the insurance industry through the Bima Trinity plan involving collaboration with the general firms and the life insurance firm. With the implementation of the all-in-one policy plan and the proposed amendment to the insurance law, the ADI anticipates a significant boost in insurance coverage, bridging the existing protection gap in India. This will help achieve the ADI goal of insurance for all by 2047. Insurance ADI has relaxed norms for the surety bond to expand the safety surety insurance market by increasing the availability of such products. Surety bond is a type of insurance policy protecting the parties involved in transaction or contract from potential financial losses due to a breach of contract or the types of non-performance. It serves as a risk mitigation tool for maintaining integrity, quality, and adherence to contractual term, ultimately contributing to smooth functioning of the project, especially in infrastructure sector, and fostering a healthy balance business environment. Insurance Information Bureau of India (IIB) was established by the ADI in 2000 and formally inaugurated in 2010. Registered as an independent body under the Andhra Pradesh Society Registered Act 2012. Act as a single platform maintaining a repository and analytics of insurance sector related information in India. Provides a bundle of services related to motor insurance to multiple stakeholders. Spearhead mortality and the morbidity investigation center operation. Handle center index server which acts as a nodal point between the different insurance repositories. Maintains a registry of all hospitals in the network of insurance. Registry of all hospitals in the network of insurance. Okay, it serves as a risk mitigation tool for integrating integrity, quality, and adherence to contractual. Risk mitigation tool for maintaining integrity, quality, and adherence to contractual term, ultimately contributing to smooth functioning of the integrity, quality, adherence to contractual term. Functioning of project, especially in the infrastructure and fostering a healthy business environment. Insurance Information Bureau of India, Russian hackers encrypted IIB data through a ransomware attack. Demographic define unemployment rate highlighted in the recent periodic labor force survey. A quarterly bulletin for the ITNA has raised concern about the ability of the country to reap the demographic dividend. The unemployment rate among the youth in the urban India fell during the fourth quarter of 2022, but it remained elevated at 17.3% against the 18.6% in the third quarter. States such as Rajasthan, Himachal Pradesh and Union Territory of Jammu and Kashmir had over 30% unemployment rate in the fourth quarter 2022. Demographic dividend. Demographic dividend refers to the economic growth potential that can arise from the favorable demographic structure. Demographic dividend refers to the economic growth potential that can arise from a favorable demographic structure within a population. It occurs when a country experiences a significant proportion of its population in the working age group, typically between the 15 to 64 years, related to independent, 49 younger, 65 and older. Facts to highlight that India is in the middle of the demographic transition. Foreign fertility currently 2.0. It refers to the economic growth potential that can arise from a favorable demographic structure within a population. It occurs when a country experiences a significant proportion of its population in the working age group, typically between. It refers to the economic growth potential that can arise from a favorable demographic structure within a population. It occurs where the country experiences a significant proportion of its population in the working age group, typically between the 15 say 64 years, ready to dependent, 14 and younger, 65 and older. Faces to highlight that India is in the middle of the demographic transition for the following fertility, currently 2.0, raising median age from 24 years in 2000 to 29 years now, and expected to be 36 years by 2036. A falling dependency ratio expected to decrease is from 65% to 54% in the coming decade, taking 15 to 59 years as the working age population. फॉलिंग फर्टिलिटी है, डेमोग्राफिक डिविडेंड है रेजिंग मीडियन एज पहले फ्रॉम 24 साल इन 2029 ईयर नाउ एंड एक्सपेक्टेड टू बी 36 है पहले तो 2036. Okay, falling dependency ratio expected to decrease from 65% to 54% in the coming decade, taking 15 to 59 years as the working age population. Mechanism for the growth in the demographic labor supply. There is an increase in the labor supply, however, the magnitude of this benefit appears to depend on the ability of the economy to absorb and productivity employ the extra workers. Increase in savings. As the number of the dependent decreases, as the number of the dependent decrease, individual can save more. The increase in the national saving rate, it increases the stock of capital in developing countries already facing shortages of capital and lead to a higher productivity as the accumulated capital is invested. Challenges in reaping demographic dividend. Informal economy. Challenges क्या है? Informal caste discrimination, religious differences, low employability, lack of access to healthcare services, widening income gap, generating sufficient employment opportunities, gender disparity. ठीक है. इकोनॉमी कैसी है? इनफॉर्मल. कास्ट डिस्क्रिमिनेशन, रिलीजियस. ये चैलेंजेस क्या है? इनफॉर्मल इकोनॉमी है, caste discrimination and religious differences, gender disparity, creating sufficient employment opportunities, widening income gap, lack of access to healthcare service, low employability. ठीक है. तो लेबर increase in savings, the number of the dependents increases, individual can save, decrease individual can save more. The increase in the national saving rate increases the stock of capital. Developing countries already facing shortage of the capital and leads to high productivity. The government capital is invested. Human capital decrease in the fertility rate result in the healthier women and fewer healthier women and the fewer economic pressure at the home. This also allows the parent to invest more resources per child, leading to a better health and education outcome. Increase in demand, it is brought about by the increase in GDP per capita. Human capital. Increase in saving, increase in demand, it is brought about the increasing GDP per capita and the decreasing dependency ratio. Measure to reap the demographic dividend. Health and education spending. Evidence suggests that the better health facilities improve economic production. Hence, it is important to draft policies to promote health during the demographic dividend phase. Further investment in education is crucial for ensuring that the working age people are prepared for the demands of the economy. Health and education. Evidence suggests that the better health facilities improve economic production. Evidence suggests that the better health facilities improve economic production. Better health facility, better health facility improve economic production. Evidence suggests better health facility improve economic production. Hence, it is important to draft policies to promote health during the demographic dividend phase. Further investment in education is crucial for ensuring that working age people are prepared for the demands of the economy. Increase female workforce. If all women engage in the domestic duties in India who are willing to work, okay, health and education and health spending, education spending. Evidence suggests that the better health facility improve economic production. Hence, it is important to draft policy to promote health during the demographic dividend phase. For the investment in education, crucial for ensuring the working age people are prepared for the demands of the economy. Increase female workforce participation. If all the women engage in a domestic duty in India who are willing to work hard and a job, female workforce participation would increase by 20%. India can learn from the South Korea where female workforce participation for 50% have been built on legally compulsory gender budgeting to analyze the gender disaggregated data and impact on its policy. Increase health childcare benefit, boosting tax incentives for part-time work, governance reform to ensure the effective policy of coordination among the state regarding aspects migration, aging, skill development, urbanization and more. A new federal approach must be implemented to harness the demographic dividend. Interministerial coordination for the strategic. The first dividend occurs during the demographic transition process when the working age population increases as a share of the total population and the percentage of dependent decreases. The second demographic dividend results from an increase in the adult longevity. Second demographic dividend. The first dividend occurs when a demographic transition process when the working age population increases the share of total population and the percentage of dependent decreases. The second demographic dividend results from an increase in the adult longevity which causes individual to save more in the preparation for old age. Adult longevity, which causes individuals to save more in the preparation for old age. The increase in saving can thus contribute to capital accumulation and the economic growth. Whether the additional assets of older workers are invested domestically or abroad, national income will rise. In short, the first dividend yield a transitionary bonus and the second transform that bonus into greater assets and sustainable development. Thus, if the right policies are in place, the population aging can yield a second dividend. One that can be long-lasting and larger than the first dividend can last 5 decades or longer. Governance reform to ensure effective policy coordination among the state here regarding the affairs such as the migration, aging, skill development, urbanization, and more. Mummy! Ensure the first dividend yields a transitory bonus and the second transforms that bonus into a greater asset and sustainable development. Thus, if the right policies are in place, the population aging can yield a second. Okay, insert the first dividend yields a transitory bonus and the second transform that bonus into a first dividend yield a transitory bonus and the second transform that bonus into a greener asset, greater asset and sustainable development. Thus, if the right policies are in place, the population aging can yield a second dividend, and and one that can be long lasting and larger than the first dividend. Governance want to ensure the effective policy coordination among the state regarding the aspects such as the migration, aging, skill development, urbanization, and more. A new federal approach must be implemented to harness the demographic dividend. Interministerial coordination for the strategic planning, investment, monitoring, and course correction should be an important feature of this governance arrangement. Bridge a skill gap. Importance must be given to vocational skill, internship, embedded apprenticeship, a degree program to ensure that a student receive a hands-on learning experience in a real life scenario. Further, there needs to be a collaborative understanding between the industry and the academia to ensure that the education system is aligned according to the needs of the current job market. Encourage the foreign capital inflow. India should have a gross fixed capital formation. India should have a gross fixed capital formation of 33% of GDP. Gross fixed capital formation of 33% of GDP in order to meet its growing and growth and job creation goal. This translates to a cumulative capital requirement of around US 120 trillion over the next 25 years. Given that domestic savings will fall short of investment requirement, India needs to augment the foreign capital inflow. India should have a fixed capital formation of 33% of GDP to meet the growth. 33% gross fixed capital formation. This translates to a cumulative capital requirement of around US 122 trillion. Given the domestic savings will fall short of the investment requirement, India needs to augment the foreign capital inflow by creating more pockets of opportunity that generate higher return. Steps like the flexible labor market policies, appropriate macroeconomic and financial reform are needed to encourage efficient allocation of capital. Transition from the agriculture sector. India also reduces share of population that is dependent on the culture. India needs to facilitate the absorption of the labor into productive employment and promote relevant programs and the policies that may implement the next generation of economic reform to deliver the efficient public service. Economic reform to generate efficient public services, particularly focus on long neglected social needs related to nutrition, quality management, literacy, education, water supply, sanitation, urban development. Government that ensure the respect for the property right and sanctity of contracts and the rule of law are more likely to be able to create an economic environment that will facilitate the realization of the demographic dividend. Ruralization in India. There have been some claims that the rise in the urban employment is posing a structural shift toward the ruralization in India. Indian ruralization refers to opening of the rural areas to renew rural generation jobs and farms. Opening of the rural areas to renew rural generation jobs and farm. However, in a developing country like India, such trend is considered akin to deindustrialization. It refers to a situation where the productive capacity of the economy is distorted. Workforce shift to rural India and low industrial growth point to rising poverty level. It is opposite to the virtuous cycle of growth. Reduced tax potential in the manufacturing sectors. Reduced impact to rural. Reduced tax potential in the manufacturing sector, reduced economic growth overall, slower productivity growth, increased income inequality as surplus labor results in a low real wages, difficult for manufacturing workers to There have been some claims that rise in urban unemployment is forcing a structural shift to the ruralization in India. The ruralization refer to the opening of the rural areas to renew rural generation jobs in the farmer. However, in a developing country like India, and considered akin to deindustrialization, it refers to a situation where the productive capacity of the economy is distorted. Workforce shift to the rural India, low industrial growth point to a rising poverty level. It is opposite to the virtuous cycle of the growth. Chronic lack of private investment. Share of the private capital, fresh capital formation has continued to decline from 10.8% in 19 to 8.4% during the same period. The share of the public capital formation has risen. प्राइवेट कम हो रहा है, पब्लिक ज़्यादा हो रहा है. 9.5% हुआ, पहले 6.5 था, 9.5 था. Persistent of the unemployment problem. RBI's survey of the urban household indicate that the both employment and the income situation have improved since the COVID lows, but they remain weaker than the pre-pandemic and 10 years back, resulting in a worsening of the per capita income amid the rising cost of living. Productive employment and income, poverty reduction, progression of economy, urbanization, rise in investment. Productive employment and income, poverty reduction, progression of economy, urbanization, rise in investment. Poverty regression and progression of economy, urbanization, rise in investment. Poverty reduction, progression of economy, urbanization, rise in investment. Productive employment and income, poverty reduction, progression of virtuous cycle of growth क्या है? Productive employment, income, poverty reduction, progression of economy, urbanization, rise in investment. RBI's survey of the urban household indicated that both employment and the income situation have improved since the COVID lows, but they remain weaker than the pre-pandemic and 10 years back, resulting in a worsening of the per capita income amid the rising cost of living. Workforce shift towards agriculture. India's workforce dependence on agriculture has risen from 42.5% to 45.5% in 2021 is the real agriculture of the gross value, and it has grown to at 3.8% on a 3-year compounded annual growth rate basis, higher than the 3.2% real GDP. Demand for the cereal rising high. India's monthly per capita consumption of cereal contracted by 1.7% annually from 12.9 kg to 10.4 kg in 2011-12. Contractors per capita consumption of cereal, but the trend has reversed as reflected in the GDP expenditure series on cereals and bread. Fall demand for cereal rising again. Fall in the industrial production. Industrial production (IP) growth in the US has improved, but India's industrial growth fell to a 10-year average of 2.1% compared to a 7.7%. Production linked incentive scheme across 14 key sectors. PM Swanidhi provide working capital loan to street vendors. Here, vending in urban area. PM Gati City transformative approach for economic growth and sustainable development. Deen Dayal Antyojana Yojana National Urban Livelihood Mission to reduce poverty, vulnerability of the urban poor. Household Credit Guarantee Trust Fund for micro and the smaller enterprise to provide collateral free loan up to 1 crore. Pradhan Mantri Mudra Yojana yet to collateral free loan to MSME. Despite this, India remains the fastest growing major economy. India's gross domestic product grew 7.2% during the fiscal year 2022-23. Also, the economic survey pointed that India's economic growth in financial year 23 has been principally led by the private consumption and the capital formation, and they have helped generate employment. Moreover, the growth is expected to be risk in financial risk in 2024. The government steps like PM Gati Shakti, National Logistic Policy, and the Production Incentive Scheme will boost the manufacturing output, enhance productivity, generate employment for storage unit. The Union Cabinet approved the construction and employment of the Interministerial Committee for the facilitation of the world's largest grain storage plant in the cooperative sector. For the Primary Agriculture Credit Society, these are the village level cooperative credit society that serve as the last link in the three-tier cooperative credit sector headed by the state cooperative bank in the state level. PAC has involved in a short-term lending or what is known as crop loan. The plan focuses on strengthening the food security, reducing wastage, empowering farmers. Food security, reducing wastage, empowering farmers by creating godowns and agriculture at the Primary Agriculture Credit Society implementation. Interministerial Committee will constitute the chairmanship of the Minister of Cooperation scheme when identified for conversion. Ministry of Agriculture and Farmers, Agriculture Investor Infrastructure Fund, Agriculture Marketing Infrastructure Scheme, Mission for Integrated Development of Horticulture, Submission of Agriculture Mechanization, Pradhan Mantri Formalization of the Micro Food Processing Enterprises, Pradhan Mantri Formalization of the Micro Food Processing Enterprises Scheme, Pradhan Mantri Kisan Sampada Yojana, allocation of food grains under the National Food Security Act 2030, procurement operation at the minimum support price. Okay, an interministerial committee will be constituted under the chairmanship of the Minister of Cooperation to ensure the timely and the uniform implementation of the plan in a professional manner. The Ministry of Cooperation would implement a pilot project in at least 10 selected districts of different states. The following schemes have been identified for convergence under the plan. Food grain management in India. Total production. India produces about 3,100 lakh tons of the food grains a year. 3,100 lakh ton. Okay, food grain management in India. Food grain procurement mechanism, centralized procurement. The government of food, the procurement of food grain in the central pool is undertaken either by the Food Corporation of India directly or by the state government agency procuring the food grains which are toward the stock to FDI. Decentralized procurement scheme introduced in 1997 to 1998. Food grains are produced and distributed by the state government themselves. The distribution of the food grain, the central government of the FCI has given the responsibility for procurement, storage, transportation, bulk allocation of the food grain to the state government. The operational responsibility including the allocation within the state, identification of the eligible families, issues of ration cards, supervision of the function of the fair price of rice with the state government. Need for an effective food grain storage system, developing a backward and the forward linkage and effective storage system. 8 farmers as well as the forward linkage such as the food processing sector, lack of the local storage system. The household sector remains about 70% total production, and the total production, the household sector retains about the 70% of total production. A substantial quantity of food grains are wasted due to the improper storage and the family improper storage management. Often the stock stored in the warehouse remains in storage for more than a shelf life, and such a long storage makes grain prone to rodent, moisture, birds, and the pest. About 80% of the handling of the warehouse facilities are not mechanized, and the traditional manual methods for loading and unloading mechanized nahi hai, and handling food grains and the commodities are used manual. Gaps in the number of the storage facility. The FCI has insufficient grain silos and covered godowns with the adequate storage capacity. The country's current godown facility can store only up to 47% of the produce. Issue with the cold storage. India's cold storage capacity unorganized and dominated by the traditional cold storage facility. India's cold storage capacity is unorganized and dominated by the traditional cold storage facility. The distribution of the cold storage is highly uneven with the India's cold storage capacity is unorganized, dominated by the traditional cold storage facility. The distribution of cold storage is highly uneven with the majority of the cold storage limited to Uttar Pradesh, Gujarat, Punjab and Maharashtra. The government initiative for augmenting the grain storage capacity. National Policy on Handling and Storage of Food Grain 2002 uses storage and storage law, transit law at the farm and the commercial level, and to modernize the handling और mechanical करना है, not अभी भी कैसा यहाँ पे क्या लिखा था ओके आर नॉट मैकेनाइज, वी हैव टू मैकेनाइज दैट, मैनुअल नहीं करना है. और मॉडर्नाइज द हैंडलिंग स्टोरेज ट्रांसपोर्टेशन सिस्टम फूड ग्रेन. ग्रामीण भंडारण योजना सब्सिडीज प्रोवाइडेड फॉर द कंस्ट्रक्शन एंड renovation of rural godown to create a scientific storage capacity. The Warehousing Development Regulation Act 2008 made the warehousing receipts and negotiable private entrepreneur guarantee scheme to augment the storage capacity of the Financial Corporation of India in PPP mode. PM Kisan Sampada Yojana for development of the cold storage facilities, specialized in packaging unit, warehousing facility, development of cold storage facility. Number 2, FCI has insufficient green silos and covered godowns with adequate storage capacity. The country's current godown facility can store only up to 47% of the produce. Now, what's the issue with the cold? India's cold storage unorganized, reducing loss at the farm gate, building aggregation units, a modern pack house and a bowling points at the village level. The transport links should be promoted. Decentralized, more responsibility can be shared with the state which are performing well, such as Haryana, Punjab, Andhra Pradesh, Chhattisgarh, Madhya Pradesh. Drying, aeration, and the temperature control. Moisture and the temperature determine how long the grain can remain in the storage without losing its quality. Therefore, the altering storage methodology management in accordance with these indicators, strengthening the traditional method. Traditional means of storage should be strengthened with modern input like bamboo structure, mud, and earthen structure. Strengthened with more input like bamboo, mud, and earthen structure. Removing covered and the plinth storage cap should be gradually phased out with no grain stocks remaining in cap for more than 3 months. Removing covered and plinth coverage. Covered and plinth coverage, silo bag technology, conventional storage should be used instead. हमें क्या यूज़ करना चाहिए? Silo bag technology, conventional storage with no grain storage remaining in cap for more than 3 months. Promoting private participation, government can also provide credit facility for farmer producer organizations to invest in storage warehouses, cold chain storage, etc. Using emerging technology in food storage. Adoption of the technologies like Internet of Things, blockchain, and artificial intelligence can aid food grain movement. Sensor based data can be used to access the quality of the grains at the real time, maintain a temperature and the moisture control variables accordingly. Okay, चलो सीरीज वाला नेक्स्ट पार्ट में पढ़ लेते हैं. थैंक यू सो मच.